Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is the Kickstart video. Today's date is August 30th, 2024. TGIF to you Asian Pacific traders who are winding down for the week. In this video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. Let's first take a look at the daily chart just to remind us where we were earlier this week. The high price moved above this swing area. The swing area was defined by this low right here. The market moved higher off of that level, then broke below that level, and then came back up to that same level and found resistance sellers, and the market fell off all the way to the 95 level. That level, by the way, came in at 111.84, and as you can see, the price moved just above it earlier this week, but could not sustain the momentum, and then we started to use that level as resistance and moved lower off of that level over the last few trading days. Now the move to the downside that we saw in yesterday's trade took the price back below this swing area between 1.1095 and 1.10346, and that level area is going to now be resistance for traders in the short term. If the price can stay below the 95 level, let's say, the bias remains more to the downside. Taking a look at the hourly chart, that level also is important. Going back to this, looking at this price action over the last few weeks of trading, or 7 or so days of trading, you can see that the price first moved above this 97 level, not the 95 level, 97 level, and then found support against it, 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 support against it. All these times that the price found support against it until yesterday when the price fell below that level and then used the level as a resistance to push to the downside. So you can see the importance of this area up here. And if you're inclined to be a seller of the euro versus US dollar, you think maybe it's gone too far in this move to the upside, we're due for a corrective move, maybe to the 38.2% retracement, then lean against this level right here. As long as the price stays below that level, the bias remains in the short term, at least to the downside, and we have the 38.2% retracement as something to look forward to on the downside. Break below that level, and maybe we head back down toward the 110-ish type level where we had this swing area. So be aware of that level. So this is going to be a key barometer for today and going forward in the euro versus US dollar. So be aware right around the 110.95 to 90. Let's call it 111 level on the top side. Stay below that level, that area, it's more bearish. Let's take a look at the dollar versus yen next. And again, we'll take a look at the daily chart. And quite frankly, admittedly, you see this move to the upside here, this move from the 2023, I guess that's December, well, actually January low to the high price that we saw in 2024. The 50% of that entire move came in at 144.58. And that this week, the price action was a mincemeat around that level. We just chopped and chopped above and below the 50% retracement level. Normally, you get a bounce off of that level like we did sort of right here. But for this whole week, we traded above and below the level, including yesterday when the price fell a little bit below that, moved back to the upside. We're currently back above it at 144.96, but can we trust it? I don't know. But what it says when the price moves around a key technical level like the 50% retracement level is that the market's unsure of which way it wants to go. So let's just chalk it up to being unsure with which way the dollar yen is going next. But we'll take a look at the hourly chart. And here is that 58 level that we saw, the 50% retracement level. Was it 58? Well, anyway, right around that level. And you can see that price moved above and below it, above and below it, above and below it. What we also did in trading this week was move above and below the 100-hour moving average, at least over the last few trading days. Earlier in the week, we did find resistance sellers against that level and then moved above it here, failed, moved above it here and kind of failed. But then we started to build to the upside. We did get above the 200-hour moving average in trading here yesterday, but we could not sustain the momentum. We're back below that level. So right now, you remember I said that the market's unsure of what it wants to do. Well, being in between the 100-hour moving average and the 200-hour moving average is an indication of unsure of what you want to do. For the dollar versus yen, traders are still trying to figure it out. We'll see. Maybe it won't be until next week where we figure that out, but we do have some economic data coming out of Japan today that may push the price higher or lower. If we go above the 200-hour moving average at 145.14, that would be more bullish. If we go below the 100-hour moving average and below that 58 level at 144.44, then the bias turns more to the downside. In between these levels, it's neutral. Let's take a look at the sterling versus US dollar. Again, we'll take a look at the daily chart. See where we've been this week and where we are right now. Well, the daily chart, we broke above this high price going back to July of 2023, maybe that's July of 2023. That was more bullish. We saw increased momentum. But we did have this target up here at the 132.978.977 level, right around the 138 level. But as you can see, or 133 level. But as you can see, we fell short of that level when we started to rotate to the downside and trading yesterday and into today. The low price, however, that we saw here has found support against this old high right here. And so there's a hope against that support level. You can see that more clearly on the hourly chart. Here is that area right through here around the 42 level, 42 to 45. And you can see the price came right down to that level right through here and found support buyers push to the upside. And we're currently in between that 42 level on the downside and the 100-hour moving average on the top side. That 100-hour moving average comes at 1.32054. Currently trading at 131.65, in between this level and in between these levels, including the 200-hour moving average. So like the dollar versus yen, we're in a sort of a neutral area here where the buyers and sellers are trying to figure out which way it wants to go in today's trading. If the price were to move above the 100-hour moving average, I would expect to see further upside. If we move back below the 42 level and this rising 200-hour moving average, which currently comes in at 33, then we could see further momentum down toward the 38.2% retracement of this trend move to the upside. This is pretty decent trend move to the upside for the sterling versus US dollar, but as you can see, it's starting to break down a little bit, but still in between that neutral area, in between the hourly moving averages. So there you have it. A look at the three major currency pairs to end your trading week. My name is Greg Michaelowski. Good fortune with your trading. Bye-bye now.